The Federal Reserve just told us that the time for rate cuts has come and that we might expect a larger rate cut in September should the jobs data coming out next week come in bad. And they think it's going to be bad. Federal Reserve just gave us a big warning, and this is from the meeting at the Economic Club of Miami. You've got Chris Waller, who just gave a presentation. They're just now at the end of it, and so I'm going to give you a heads up of everything that was said so far. This has been going on for nearly an hour, and I'm just going to try to keep this short and simple for you. There's a lot of really good information in this, and he gives you some insight into how they're coming up or thinking about the labor market, which we all know is the most critical part of this economy right now. So let's get into it. The time has come to adjust economic policy. This is like he plays World of Warcraft. The time has come. The moment is at hand. Inflation risks are limited, he says, and we don't want to wait for the labor market to deteriorate any further. Based on the data at hand, the data is stronger today for a rate cut that the risks to the downside of the labor market have increased, and they could happen much more rapidly than we are prepared to handle at this point. We already saw in July that job creation was weak. Now we've seen with revisions over the last 3 months that it's even worse. But here's something he said that's very interesting, is not only are we worried about the revisions of the last 3 months, but consider that when we get the QCEW revisions, which we'll get a preliminary estimate on September 9th, he specifically pointed those out, and then we'll get the final revisions in the spring of next year, which is just really late data. He thinks that after accounting for revisions that are coming, employment has likely been negative for the last 3 months. And he responds to other Fed members and who say, hey, like, you know, what if what's happening right now is just, you know, a normalization because we have less immigration, and because we have less immigration, labor supply is going down. He comes back at this and says, who says it is okay to have negative break-even rates? He says everybody's so worried about break-even rates, but when is it okay for us to just look at the unemployment numbers and go, we're probably negative, this is bad? And when is it okay to look at that and go, but it's okay? It's not. And that's where he says we should get on with it. Not only should we go for the 25 basis point cut, but we should be prepared to cut another, this is very interesting, 4 to 5 times, because we need to get to neutral. He kind of calls it the destination being neutral, and he suggests that it determines, well, the weather sort of determines how fast we're going to get there, which is basically the weather of economic data. And basically we're going to get to somewhere around 3% as a Fed neutral rate. And now it's just a matter of the data, which he thinks is likely to continue weakening over the next few months, and therefore we should get on with it. He also says growth for the first half of the year is averaging about 1.5%. Yeah, we got GDP numbers today, but they just average out with the 0 or negative 0.2% GDP we had in the first quarter. So you have that sort of pull forward, and then the import-export disasters of the numbers, and that's why we have an average first half growth of just 1.5%. He sees in the third and fourth quarter, while there's hope that businesses are going to take their uncertainty and start buying and going, look, we're not going to wait forever, let's just start buying. He wants to be prepared that there's a possibility that uncertainty about the economy, uncertainty about hiring, and uncertainty about artificial intelligence is all going to end up manifesting in a rapid decline in the labor market, way faster than what the Fed is prepared for. And he actually warns, I actually think rightfully so, mind you, I completely agree with everything he's throwing down, I'm picking up. I'm like, I mean, he's right. This has always been my concern, that J-Pow would be caught up being worried about inflation, and then all of a sudden the labor market poops the bed, and then guess what? Then all of a sudden you look and go, oh crap, it's too late, because Fed policy operates with, quote, long and variable lags. We know this. This is all old news. It's kind of like the old news that when we look at the lines on the Qs today, can you believe how perfectly these freaking lines operated today? In the Alpha report this morning, we called the Qs going to about 577 to 578, and look at what happened. We ran through my 576 line, ran up to 577, ran up to within a penny of 578 before pulling slightly back down at the close. Really impressive, just like that Alpha report call that we're probably going to lose 347 on Tesla, which we did, and that Snowflake was likely to do well, which Snowflake ended up 20% on the day. You could look at just the chart from here to here. Really good call. In the morning, we went through the earnings call in our Alpha report for course members. Remember to use coupon code Bullish Catalyst over at meetkevin.com and get lifetime access. But let's keep going with the Federal Reserve. So continuing on here, he says that when we start looking at estimates or try to get an idea of what's going on in the third and fourth quarter, we could see that new orders are already starting to show indications of declines. While they're modest, we're seeing modest declines over the last few months and flat production. This at the same time as postponements in hiring and investments, not good. He's also hearing businesses suggesting, hey, layoffs may be coming. Now, we haven't actually really seen those layoffs come yet, but remember, once those Beveridge curve normalizes, we'll be at 10% unemployment basically overnight. It's insane how fast it's going to happen. And he is laying out this warning, correctly so, because again, we think Powell is going to be too late if he's so focused on inflation. And Waller is saying, look, tariffs are a tax. They don't raise inflation, they're just a tax. Yeah, consumers are going to pay them. Yeah, businesses are going to pay them. Yeah, exporters and manufacturers are going to pay them. He thinks you kind of get like a one-third division. One-third consumers, one-third importers and wholesalers, and one-third manufacturers. That's how you're going to get tariffs paid. It's a tax. Everybody has to pay them. The government earns more money. People earn less money. And in the middle, there's some lost money because you always have a deadweight loss with government taxation, is what it is. But he makes it very clear that the public sector labor market numbers right now are really bad, but ignore the public sector numbers. Just look at the private sector. How's the private sector doing? Well, it's averaging about 50,000 jobs over the last 3 months. He thinks that's basically indistinguishable from negative, that we might be at negative right now, which kind of begs the question of like, if he really thinks that, we should be cutting like yesterday. And that's probably why he went for a July cut, or he was just applying for the Fed chair position. Who knows? But anyway, he says the quits rate right now is similar to the mid-2010 levels, and that people are not switching jobs to go make more money. If they're switching jobs, it's because they have to. They lost their job for some reason, and they have to. Like, people don't want to leave their jobs right now. He says that teenager unemployment, which is really cyclically sensitive, is also back to mid-2010 levels, which is not great because it was a slower economic time. Now, something else to consider is he talks about the quality of payroll data. He says that there's constantly been this concern over the quality of data due to declining response rates. And he says that's not because businesses aren't responding, but rather that they're responding later. That when the BLS sends out surveys, businesses have 3 months to return data. About 5% of firms just don't respond. But in the past, like 10 years ago, 75% of businesses got back within 1 month. Now, only about 60% get back within 1 month. And that's why we have revision 1 and a revision number 2 as those surveys start coming back and completing out the picture of what's actually going on in the labor market. And that's why he thinks the latest revisions are so noisy, which they tend to be around turning points, that we're probably at a turning point in the labor market. And we're either, knock on wood, hopefully going to pick up, or we need to look through inflation and we should cut now. In fact, he goes as far as saying, I feel even more strongly that we need to cut now than I did in July, and that conditions could deteriorate further and quite rapidly, and we do not want to fall behind the curve. We know we are restrictive now. We should cut in September. The next data set will tell us how much to cut in September, and we should anticipate more cuts coming, because we should anticipate the economy is going to keep slowing and there's going to be more of a slowdown in labor. Don't wait and end up behind the curve. Wow. That sounds like it's going to be really bullish for real estate, but hopefully also any kind of investments you're making. I always hope the best for everybody making their investments, but this gives you an update on what Waller's saying. It is possible he's just applying for a job at the Fed. Speaking of the Fed, by the way, you have Lisa Cook arguing that it was a clerical error in terms of why she is in a place of Oh, yeah, I did get 2 personal residence loans, but that was a clerical error, and I didn't hurt anyone. Oh, okay, well, that might not be the best defense, but I guess we'll see how it goes. So anyway, this gives you a complete update. Remember to go to meetkevin.com, check out the Alpha Report, get access to that every single day the market is open, and our course member live streams, so that way you could get these delicious setups as well, like what happened today on Snowflake, Tesla, and the Qs. Thanks for watching.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.